Hello, my name is Jaden Perez, and I'll be presenting my business presentation. The business I picked was a company called Gas Trip. So, basically, to start out, what is Gas Trip? Well, Gas Trip is a company that specializes in the delivery of fuel. It's based out of Southeast Missouri, and what we do specifically is we deliver gas to customers without them having to deal with the hassle of going to a gas station. To get more into detail about this, what we actually deliver to is basically anywhere. I mean, we deliver to work, we deliver to your home. It could be on the side of the interstate. It does not matter. As long as you go through our app, our Gas Trip app, we can come to you. The goal is to basically never have gas our customers get gas themselves, and we want to make this the most swift and efficient manner ever. So we don't want them to have to deal with, oh, we have to come out there and this and that, or talking to us. No, like I said, you go through the app, tell us what you need, how much gas you need. We'll have you pay right there before we get there, and we'll show up to wherever you need to go or wherever you are, and we'll fill up for you, and you never have to stop your busy day. And what makes it even better is our gas prices are matched with local gas stations. So it doesn't matter if gas goes down to $2, we're matching that. It doesn't matter if gas goes to $3, we're going to match that. So you're never going to have to worry about the indifference of the gas prices between the gas station and ourselves. So moving on, what we have here is a competitive environment. So what does our competitive environment look like? We have to deal with gas stations, but not even only that, the growing electric vehicle market. But to start out first with the gas stations, what do gas stations offer that we don't offer? Well, they offer many more amenities outside of just fuel services. They offer things such as food and drinks or any other thing that you need. And that's what we don't offer. We don't offer that. And that is a weakness of ours. And they also have multiple locations that are bringing in much cash flow compared to us. You could use an example like ExxonMobil has many gas stations throughout the country, and they probably have hundreds of thousands of stores, and they're bringing lots of cash flow for each of those stores, which it gets to like the millions and billions of dollars every year. Or you could use a local company such as Rhodes, and they essentially have a monopoly on the gas station market just in Cape Girardeau alone. And see, that's where we don't have that yet. We don't have the monopoly of a gas delivery service across the country or locally yet. Now, our electric vehicle market, when we talk about that, the reason that is a concern right now is because probably here about a few years, it probably will be a mandate where, companies like General Motors will have to be required to only make electric vehicles. And thing we don't offer is electric vehicle charging. Not saying we couldn't do that in the future, we probably will have to do that in the future. But right now, that is a concern when it comes to competition, is that we don't have that, basically that luxury of charging your vehicle right now. So what does our marketing plan look like? Well, we want to book on billboards, but not just any billboards. We want it primarily on the main parts of Southeast Missouri, such as the interstate going from north to St. Louis to south to Memphis, where you're driving your vehicle and you see our campaign, and it's saying, "Hey, we can deliver fuel from anywhere." That's going to get somebody's attention as they are driving a vehicle, and maybe their tank is low or something like that. It's going to catch their attention. It's always going to have them remember us, maybe in the future or currently or anything like that. We also want to pay for ads on social media, such as Instagram, TikTok, Facebook. The reason for that is, what is the main thing people do in their free time? They're usually on their phone. So that is a great way to get their attention. And we also want to put logos and the app decals in our truck, just explaining, hey, download our app. This is how you do it. It's pretty swift. It's pretty efficient. And yeah, we're just wanting to use that as a way to teach the future customer that we do have an app that you can use instead of having to just call us or having to Google us or this and that. All right, what does our operations look like? We have two full-time workers. Now, these two full-time workers, they work about 8 hours a day, or yeah, 8 hours a day, and they get paid $18 an hour, and they work 5 days a week. So with those two workers, we have two trucks that carry both gas and diesel, and with those two trucks, there's both a gas and diesel tank on each. These are about 10,000-gallon tanks. Now, I want to explain this. The reason we have diesel to this company is, yes, our main market is delivering gas to like the regular consumer, but with diesel you can also make good sales off that, since obviously there's diesel trucks, but not even that. Construction job sites, they use equipment that uses primarily diesel. Most construction heavy duty equipment is using diesel, and they take way more gallons than a regular car would. So that'd be a great way for us to just boost sales. Now, where our profit is driven is through buying fuel at wholesale and selling at retail price. So yes, we do sell the gas or diesel at a local gas station price to our customers, but we're buying it at wholesale. So our wholesale price is always a 30-cent profit margin on both gas and diesel for every gallon that is sold. And then also we have a service charge. Now this is where we're making most of our money at. Our service charge of $10 for every transaction. Actually, I should take that back. We're not making most of our money from that, but this is where most of our profit is coming from. Our service charge of $10 for every transaction. So anytime somebody books with us on the app, that one time it's a transaction every time. So we rely heavily on having thousands of transactions every year to eventually make a profit. And what we'll do is, since we're working specifically out of Missouri, we'll have a Missouri business license, and we hope to expand where we can get an Illinois or Arkansas business license or elsewhere. So moving on, what is our financial forecast looking like? Well, we're a sole proprietor company. That is me being the owner, and we have about one loan. Well, more like four loans, but that loans are more of on our equipment. That is on the two vehicles, and we have four tanks. So what we have here is $96,000 in total in loans, which is not that bad. Not bad for a startup company. Uh, so yeah, so to go ahead, we have our forecasted year one balance sheet and income statement. So when we look at the projected balance sheet of year one at the end of the year, we're not doing too bad. I mean, we have enough cash on hand. We have a good enough amount of assets to keep our company afloat and enough equity to keep our company afloat. We're not struggling where we have to just shut down operations after the first year. I mean, we have close to $50,000 on cash on hand and around $40,000 in accounts receivables. Now, our current liabilities, when it comes to salaries and wages payable, it is kind of high for two workers. I mean, $75,000 at the year end for two workers, which, that probably won't have to be much of a worry as we grow, but right now it is. And I would say our long-term liabilities, yes, we have a vehicle loan of $80,000 for the two vehicles, and then equipment for the four tanks. So yeah, our long-term liabilities are $96,000 right now, and as you'll see on the income statement, that is where we will have a big problem driving a profit until these loans get paid off. So moving on to that income statement, as you see, we have a net loss of negative $33,618. Now, most of this is coming from our very low profit margins on gasoline and diesel sales. Now, yes, we made $171,000 on gasoline sales, but we also had a cost of goods sold on gas of $150,000. That's only a $21,000 profit from the margin, the what we buy at wholesale and we sell at retail price when it comes to selling gas. It's not very big. So we do need to expand our transactions, how many transactions we're doing. And as you can see, just on service fees alone, we had $57,000 and $500. That's not bad, but we do need to expand more and more and more on transactions per year to get over that profit line. I mean, our operating expenses were pretty high. I mean, we had total operating expenses of $94,000, around there, $95,000. Now, this is going to come from the salary and wages primarily, but we also have insurance, and as our company expands, we're probably going to have to pay more insurance too, and depreciation of like $10,000. So we do have a lot of expenses right now, and with the interest expense of $4,800 on the year for our loans. And this is where I was coming in earlier and explaining how once we pay off these loans, we will eventually have no problem getting over that profit mark and actually making great cash flows. It's just the fact that those loans are there is what's keeping us back. And then once we pay those loans, we can just start making straight profits after that. We're not going to have to worry about an interest expense or things of that such, or our liabilities will also be pretty low. One thing also I want to touch up on is we didn't pay no income tax. Obviously, we didn't make no profit. So that's not going to be a big worry until we start getting to that profit area. So moving on, let's do a SWOT analysis. So what is our strengths? we are in a very small market of gasoline delivery services. Now, this is not even just local. This is global, national, whatnot. Yeah, there's not much competition. There's very few companies that do this. So that is not even one of our biggest concerns right now, and it actually helps us out. And also, we're very convenient and time efficient. I mean, the customer doesn't have to go to a gas station or stop or waste 5 minutes in their day when they can be at their destination already. They can just call us. We'll fill it while they're busy or at home, work, whatnot. And that's our biggest strength. People are attracted to that. Now, when it comes to our weaknesses, we are very high expenses with low profit margins per gallon of fuel. This is a concern because that means we have to make closer to 10,000 transactions per year to get over that profit mark, which could happen, but it's not going to happen within the first year, 2, maybe 5 years, maybe 10 years. It's a long-term thing. Now, coming back on this, yes, we are convenient and time efficient, but the one thing that could scare a customer's away is that service fee. I mean, some people value their time, so they don't care to pay that $10 service fee that we have. But some people rather just not pay that $10 and just go to the gas station themselves, fill it themselves, and not have to worry about paying an extra $10. Now, that is one area that could be a very big concern for us. Now, when it comes to opportunities, we have the potential to move into other states and regions of Missouri with very little competition. That is going to be our biggest factor of driving more transactions, is moving into other locations around the country, and not even just around the country, in Missouri too, Middle Missouri, Western Missouri, and then eventually get into areas like Illinois and Arkansas and whatnot. Um, Another opportunity is we have no physical location, so we can just reinvest all of our profits into expanding the company. We don't have a physical office building where we have to pay utilities or things like that. Most of our fee or most of the things we're spending on when it comes to like that area is our maintenance on vehicles and things like that. But it's not as much as paying like a mortgage on an office building or paying your utilities. Now, when it comes to our threat is the electric vehicle industry is growing rapidly. I mean, like I said, there's going to be government regulations where eventually a company like General Motors or Dodge or Ford are going to have to start making electric vehicles only. And you could also say that's an opportunity for us to get into electric market fueling service where we don't just do gasoline and diesel, but we also have electric charging services that we can provide. And then also our threat, gas stations offer more than just gas. Like I said earlier, they're offering amenities such as food and drinks and things of that nature, and they have major cash flow, especially if they're across the country and around the world. So yeah, those are our threats. But the overall view of this company, like I said, we're not going to make profit probably in the first 5 to 10 years, but I could see us just becoming a very profitable company after that. Once we get these liabilities paid off, such as the car or the vehicle loans and equipment loans and things like that, and then we start expanding into other regions of the state and then eventually the country. So yeah, thank you very much.